The cryptocurrency market. It's a wild ride, full of twists, turns, and the occasional loop-de-loop. One minute, you're riding high on a wave of green candles. The next, you're staring into the abyss of a red-soaked chart. Today, we're diving into the forces shaping the crypto landscape. Next, we'll explore the world of altcoins. We'll examine why some are thriving while others are left for dead. Venture capitalists, high FDV tokens, and the ever-present barbell effect will all be on the table. And of course, no crypto conversation would be complete without mentioning the meme coin mania. We'll delve into the forces behind their rise, examining the concept of the cabal and the allure of rapid gains. So buckle up, grab your favorite beverage, and get ready for a deep dive into the thrilling world of cryptocurrency.
Let's talk Japan, a nation known for its technological prowess, sushi, and historically low interest rates. For decades, Japan has maintained ultra-low, sometimes even negative interest rates. But recently something shifted. The Bank of Japan has hinted at a potential policy change, a move away from these ultra-low rates. This sent shockwaves through global markets, and the crypto world is no exception. Even a small change in Japan's monetary policy can have outsized effects on the global financial system. This uncertainty is like rocket fuel for market swings. Enter the yen carry trade. Imagine borrowing money where it's cheap. That's Japan with its low interest rates. Then you take that borrowed yen and invest it in assets with higher returns elsewhere, like say, the US stock market or even, you guessed it, crypto. But Japan's potential policy shift throws a wrench in this well-oiled machine. If Japanese interest rates rise, the yen carry trade becomes less attractive. Investors might pull back from riskier assets, leading to a potential sell-off. Section 3. Tech stocks and the yen-A tangled web. Tech stocks, especially those high-growth, high-valuation darlings, have benefited immensely from the yen carry trade. A stronger yen could mean less money flowing into these stocks, potentially impacting their performance. And since the crypto market often marches to the beat of the tech sector's drum, a downturn in tech could spell trouble for our beloved digital assets. Section 4. Global liquidity, the tide that lifts or sinks all boats. Japan's monetary policy shift has implications beyond just the yen carry trade. It also impacts global liquidity, which is essentially the amount of money sloshing around in the global financial system. When Japan keeps its interest rates low, it injects liquidity into the global market. But if they tighten the tap, that liquidity dries up. Less liquidity means less money available to flow into crypto, potentially putting downward pressure on prices. Section 5. Crypto on high alert. Bracing for the tsunami. So, what does this all mean for crypto? In short, it adds another layer of uncertainty and risk to an already volatile market. If Japan's policy shift leads to a stronger yen, a pullback from risk assets, and reduced global liquidity, the crypto market could be in for a bumpy ride. The crypto market is influenced by a multitude of factors, and Japan's policy is just one piece of a much larger and more intricate puzzle.
Remember the altcoin explosion? The days when every new token launch was met with feverish excitement and promises of life-changing gains? Yeah, those days feel like a distant memory. The altcoin landscape is littered with the digital carcasses of projects that once promised the moon. While Bitcoin and Ethereum continue to dominate the market, many altcoins are struggling to stay afloat. It's a combination of factors, from the influx of venture capital money to the rise of meme coins, that has reshaped the altcoin landscape. Venture capitalists, once content to dabble in the fringes of the tech world, have discovered crypto, and they've come bearing gifts, bags of money to be precise. But this influx of capital, while seemingly a boon, has created its own set of problems. We're now seeing projects with sky-high valuations, often referred to as fully diluted valuations or FDVs, before they've even launched a working product. When these projects inevitably fail to meet these lofty expectations, the result is often a dramatic price crash, leaving retail investors holding the bag. As the altcoin market grapples with these challenges, a clear trend has emerged: the rise of the barbell effect. On one end of the barbell, we have Bitcoin and Ethereum, the undisputed heavyweights of the crypto world. These assets have established themselves as relatively safe havens in times of market turmoil. On the other end of the barbell, we have, well, everything else. These assets tend to be much more volatile and speculative, driven more by hype and sentiment than by fundamentals. Investors are increasingly flocking to the perceived safety and stability of Bitcoin and Ethereum, while the rest of the altcoin market is left to fight for scraps. Avalanche and the altcoin exodus, a cautionary tale. Let's take a look at Avalanche, AVAX, as a case study. Once hailed as an Ethereum killer, Avalanche promised faster transaction speeds and lower fees. Fast forward to today, and Avalanche, like many of its altcoin brethren, has seen its price plummet. Avalanche's story serves as a stark reminder that even promising projects with solid technology can fall victim to the brutal realities of the crypto market. So, what does the future hold for altcoins? The truth is, no one knows for sure. But one thing is certain. The days of easy money and exponential gains are likely over. The altcoin market is maturing, and with that maturity comes increased competition and scrutiny. Only the strongest projects, those with real-world utility, strong communities, and sustainable tokenomics are likely to survive. The altcoin market may be a treacherous landscape, but with careful planning and a healthy dose of skepticism, it is still possible to find hidden gems.
Remember the days when the internet was just for cat videos and arguing about politics? Pepperidge Farm remembers? Now it's a breeding ground for the next big financial phenomenon, meme coins. These digital currencies, often inspired by internet jokes, memes, or even Elon Musk's tweets, have taken the crypto world by storm. What started as a joke, Dogecoin anyone, has morphed into a multi-billion-dollar market. Meme coins tap into our collective sense of humor, our desire for quick riches, and our need to be part of something bigger than ourselves. In the meme coin jungle, it's not just about technology or utility, it's about community and, dare we say, manipulation. Enter the cabal, a shadowy group of influencers, whales, and social media personalities who often orchestrate the pumps and dumps that define these markets. These modern-day Pied Pipers use their platforms to hype up specific coins, sending prices soaring as their followers rush to get in on the action. Meme coin communities are notoriously fickle, and even the most influential figures can lose control if the narrative shifts or a new, shinier object catches the internet's attention. It's a delicate dance of hype, manipulation, and blind faith. Let's talk legends. No discussion about meme coins would be complete without paying homage to the OGs, the pioneers who paved the way for the Pepes and Dogalans of the world. We're talking, of course, about Dogecoin and Shiba Inu. Dogecoin, the granddaddy of meme coins, started as a joke in 2013, a riff on the popular Doge meme featuring a Shiba Inu dog. Fast forward to 2021 and Dogecoin, fueled by Elon Musk's tweets and a wave of internet hype, reached an all-time high of over 70 cents. Shiba Inu, often dubbed the Dogecoin killer, followed a similar trajectory.
Hold on to your hats, crypto comrades, because the Federal Open Market Committee, or FOMC, is meeting, and that means one thing: market volatility. The FOMC is like the wise old owl of the financial world, except instead of delivering wisdom, it delivers interest rate decisions that can send markets soaring or spiraling. For crypto, which thrives on risk appetite and liquidity, the FOMC meeting is a high-stakes event. Section 2. Interest rate roulette. Will the Fed raise, hold, or fold? The market hangs on every word uttered by the Fed chair, passing statements for any hint of what's to come. Will it be a hawkish stance, signaling more rate hikes and potentially putting a damper on risk appetite? Or will it be a dovish tone, suggesting a more accommodative approach that could send risk assets, including crypto, higher? Higher interest rates generally make borrowing more expensive and can strengthen the US dollar. On the other hand, a pause or a hint of future rate cuts could be interpreted as a sign that the Fed believes inflation is under control, potentially boosting investor confidence and reigniting the crypto rally. Section 3. The DXY dance, crypto's unwilling partner. In this intricate dance of monetary policy and market sentiment, the US dollar index, or DXY, plays the role of crypto's often unwelcome partner. The DXY measures the strength of the US dollar against a basket of other major currencies. When the DXY goes up, crypto tends to go down, and vice versa. A stronger dollar can make it more expensive to buy crypto, especially for international investors. Keep a close eye on the DXY in the lead up to and aftermath of the FOMC meeting. Section 4. Pump it up. The potential scenarios for crypto. The Fed announces another rate hike and signals that more are on the horizon. This could spell trouble for crypto as risk appetite wanes and investors seek safer havens. The Fed hits the pause button on rate hikes, signaling that it's comfortable with the current pace of inflation. This could be bullish for crypto as investors breathe a sigh of relief and risk appetite returns. The Fed delivers a statement so vague and open to interpretation that it sends analysts and economists into a frenzy. This often leads to short-term volatility as the market tries to decipher the Fed's true intentions. No matter the outcome, remember that the crypto market is driven by a multitude of factors, and the FOMC meeting is just one piece of a very complex puzzle. Section 5. FOMC Aftermath, Reading the Tea Leaves. As the dust settles after the FOMC meeting, it's time to channel our inner Sherlock Holmes and analyze the clues. Pay close attention to the Fed's statement and the press conference. Look for keywords on inflation growth and rate hikes. The chair's comments offer nuanced insights. Market reactions provide context for crypto impacts. Stay informed and be prepared for volatility.
Section 1. Crypto's Crossroads, Reading the Road Signs. We've journeyed through the heart of the crypto market, navigating risks and challenges. Now, let's pause at this crossroads and assess the lay of the land. The crypto market is a tapestry woven from threads of uncertainty and speculation. Amidst the chaos, patterns emerge, offering glimpses of the future. Trading the turbulent strategies for a wild ride. Navigating the crypto market is not for the faint of heart. Fortunes can be made and lost in the blink of an eye. A few strategies can help weather the inevitable storms. Dollar cost averaging, DCA. Invest a fixed amount at regular intervals to mitigate volatility. Portfolio diversification. Spread investments across different asset classes. Risk management. Only invest what you can afford to lose and set stop-loss orders. On the radar, tokens and sectors to watch. Certain sectors and tokens warrant our attention. Decentralized finance, or DeFi, offers innovative solutions for lending, borrowing, and trading. The metaverse and gaming sectors are poised for growth. Watch for immersive virtual experiences and NFTs. Web 3.0 infrastructure is crucial for a decentralized web. Remember, this is not financial advice. Do your own research and consult with a financial advisor. So there you have it, folks. We've journeyed through the heart of the crypto Wild West, where fortunes are made and lost with the swiftness of a Bitcoin transaction. We've seen the potential risks, the challenges, and the opportunities that make this market so exhilarating and, let's face it, a tad terrifying. Think of it like this. The crypto market is like a bucking bronco. Sure, it's unpredictable and you might get thrown off a time or 2, or 10, but with a bit of grit, a whole lot of knowledge, and maybe a helmet for good measure, you just might be able to tame this wild beast. The key is to approach crypto with a healthy balance of enthusiasm and skepticism. Don't be swayed by the hype, the FOMO, or the promises of overnight riches. Remember, in the crypto Wild West, not all that glitters is gold. So, what's a savvy crypto explorer to do? First and foremost, arm yourself with knowledge. This market moves at warp speed, and staying informed is crucial. Read everything you can get your hands on, follow reputable sources, and don't be afraid to ask questions. Think of it as assembling your crypto toolkit. You need the right tools for the job. And in the crypto world, knowledge is your most valuable asset. Learn about different cryptocurrencies, blockchain technology, market cycles, trading strategies, and of course, risk management. Remember, knowledge is power, especially in a market as volatile and unpredictable as crypto. The more you know, the better equipped you'll be to make informed decisions and weather the inevitable storms. The crypto world is not for the faint of heart. It's a roller coaster ride of emotions, from the euphoria of a green candle to the despair of a red-soaked chart. But amidst the volatility and uncertainty, there's an undeniable sense of excitement, a feeling that we're witnessing the birth of something truly transformative. So, as we venture further into the digital frontier, let's embrace the adventure with open minds, cautious optimism, and an unquenchable thirst for knowledge. The crypto world is constantly evolving, and those who adapt, learn, and yes, even have a little fun along the way, are the ones who will thrive. This is just the beginning of the crypto journey, folks. Buckle up, stay informed, and remember, fortune favors the bold, but it's the informed and prepared who reap the reward.